Hello and good day, ladies and gentlemen. You're with Martin Peneth, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European session market outlooks. Big day ahead, starting with North American markets. First of all, yesterday the Dow was pretty much sideways. NASDAQ moved 55 points down though. The Dixie Index, which measures the strength of the US dollar, is up to 96, almost 97 points from 96.80. Initial jobless claims, 13,000 better than the expectations at 262,000. Continuous jobless claims, 23,000 weaker than the expected. Philadelphia Fed manufacturing survey, 0.2 better than the expectations, still negative. And CB leading indicator, as expected, at minus 0.2. The US dollar gained against the euro on Thursday as price swings in crude oil futures continue to dictate the direction for the currency markets. First times claims for unemployment benefits fell to the lowest level in 3 months last week, a sign that the US economy continues to grow jobs despite the lackluster January jobs report, while a gouge of manufacturing activity in Philadelphia area indicated contraction for a sixth straight month. Today we have the inflation reports coming out from the US, and as well as the Canadian reports are due. We are going to add a retail sales report month on month for the loonie. And also next week, the major events are the durable goods and preliminary gross domestic product on Thursday and Friday for the US markets. European markets, the DAX and the CAC holding same levels for a second day, pretty much no movement there. The French CPI came negative, as well as the trade balance for Spain, on the contrary to the Swiss one. The Ecb Minutes yesterday for January 2021st huddle was finally released earlier today. The minutes revealed that the ECB officials expect key policy rates to remain at current or lower levels for an extended period of time. The minutes also revealed the downside risks of economic outlook have increased, and that the ECB should be ready to use the broad range of instruments and tools at its disposal. Basically, it was a rehash of all that was said during the ECB press conference after the monetary policy decision was announced this week. Aside from the vague statement that key policy rates are to remain at current level for an extended period of time, there wasn't really any forward guidance on the future direction of monetary policy, which probably disappointed, I should say, a couple of traders. The German PPI month on month and year on year are coming on negative this morning. Next week, a lot of German indicators. On Monday, we have the market services and manufacturing reports for France, Switzerland, Germany, and the European Union in general. Tuesday, German GDP business climate, current assessment, and the expectations. Also Thursday, we have the consumer confidence and consumer prices month on month and year on year, followed by the unemployment rate and unemployment change. These are all next week. GDP also is due in the agenda. Asian markets, the Nikkei 225, 50 pips decline, currently trying to recover. All Industry Activity Index, which captures the monthly change in overall production by all industries of the Japanese economy, came better than previous but worse than the projected. The USD JPY declined with 110 pips, and the euro versus the yen 150 pips. The coincident index and leading economic index are due next week on Wednesday, just before the CPI data is released the following day. That would be Thursday. Pretty much no major reports for the Pacific. For the Pacific region, we are expecting a speech from the central bankers next week. If I'm not mistaken, this would be Mr. DeBilly, who will have a speech on Tuesday, if I'm not mistaken. This would be pretty much all from the Pacific markets, all major events from the Pacific markets for next week. We don't have anything on the agenda, anything on the economic calendar there. So basically, we're going to see how the currencies are affected by fundamentals or the change in their major rivals. We are going to talk also about the commodity sector. What happens there is pretty much a lot of swings on the oil, a lot of volatility there. Yesterday also another $3 move. We had a confirmation from Saudi Arabia officials that they do not plan to cut the production of oil there. So basically, everything was going up and down $3 range once again. S&P 500 index had a range of 21 points, currently at 1,920. EA natural gas storage change yesterday fell by 158 billion British thermal units, more than the expectations for a decline of 154. Despite the data struggled to a 2-month lows, the crude oil stock exchange rose 2.1 million barrels last week to a peak of 504.1 million barrels, the third week of record highs in the past month. Natural gas is trading at $1.86 at the moment, range of 10 cents yesterday. Gold had a range of $40 yesterday. Currently, the price is 1,226. It's still going down. The futures fell in North America, staying lower after data showed the number of people who filed for unemployment assistance in the U.S. last week fell to a 12-week low. Silver also had a range of 34 cents yesterday, 15.40 per troy ounce is the price right now, $32.70 for the oil. Yesterday in the Middle East, United Arab Emirates oil minister, Mr. Mazrui, criticized Iran for their intentions to continue to pump oil, while their counterparts in the region are advocating a production freeze. Again, nothing such is apparent. Anyway, that was all from me from today. Stay tuned for the CPI reports in North America. I wish you a successful trading day. Cheers. Bye-bye.